All righty, traders, this is Blake Morrow. You were listening to the Morning Edge webinar. I hope everybody's having a great trading session. Seeing a little bit of a bounce in the Aussie, the Euro, as equities hit new or near all-time highs, as equities are just, powering higher. We've got the S&P that's closing in on that 4,400 level again. I mean, we're at 43.75. We're at the highs of the session, but that recovery is allowing for some dollar weakness. Now, as I had mentioned already, and you guys already know this, what we are looking for today is the market to be moving after the inflation expectation number from the University of Michigan. That's the only number that really matters today, in my opinion. But I will say, I will say that, hold on really quick. Sorry, I was just looking at something. I want to say that if the market doesn't move on this University of Michigan number, then we're probably going to be in for just some kind of flat markets going into the weekend. That's what I would think. But let's take a look at the euro, and it's interesting. I saw some people making a really big stink out of. I saw the Jane. I knew that as well. Jane said Bank of America had added Bitcoin futures trading. I saw that too, just for some clients. It wasn't a big news. I thought the bigger news was Jack Dorsey, by the way. So I actually closed the pattern in play for the Bitcoin. The reason why I did that is I didn't want to just sit here and wait for this to get triggered and to turn the trade negative. Bitcoin bounced. There's a couple things in news. Jack Dorsey's comments, also Bank of America, a couple of their private clients some of their clients are going to be able to trade Bitcoin futures. But whatever the case may be, Bitcoin did bounce, and you can see that divergent relative strength on the hourly charts. So I was more afraid that we might get back up to like the 33,000 level. And actually, to be brutally honest, this would be a better place to be on the short side, would be right here. And it is still bearish. I'm just going to, matter of fact, since I've got us here, let's go ahead and just write that down. So Bitcoin, let's go back up to 33,500, 30,000. Actually, you know what? I think we have to write down 28. What was the level? 28. Let me just, from yesterday. 28,700. Okay. That's key, and it's still bearish. Okay, so I still think that Bitcoin is bearish. I was just afraid it was going to squeeze a little higher before it goes down. And like I said, I'd rather be on the short side a little bit higher anyway. Let's talk about the rest of the market. And by the way, I want to ask you guys, those of you that are listening in right now, what do you think of Ryan and his breakdown of the markets? Ryan from Forex Flow. What do you guys think? Did he have he has pretty? I hate it when people use that term stagflation. I hate it not because I think it's incorrect. I hate it because it's really going to be taxing on our it's going to be taxing on our on the global economy if we have persistent inflation. Carl, you liked Ryan. I think a lot of people like Ryan because he sounds like Jason Stratham. Hugo says the dude knows his stuff. Yeah, he does. Like I said, I remember when so going way back in the Wayback Time Machine, Jamie Coleman, who now is he's a journalist, more of a political journalist. He used to work on the news desk of Reuters back, I want to say like 15 years ago, something like that. Then he peeled off and started Forex Live. Smart guy, super smart guy. I don't think it was really all that. He wasn't very business savvy. I still follow him on Twitter. He's a nice guy. Matter of fact, he just liked my tweet yesterday about with the pictures with my family. So I've known the guy for years. We've talked on the phone and blah 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 blah. Anyway, he sold Forex Live to Adam Button, who, by the way, Adam Button used to be a reporter or a journalist as well, for might have even been Reuters too. Now that I'm thinking about it, maybe that's how they knew each other. I think he sold it to Adam Button. Adam Button took it over. Then they sold to Finance Magnates. But no, when Adam started Forex, or when Adam took over Forex Live, he brought in Ryan Littlestone. Ryan Littlestone is his right hand. What was his right hand man? His main analyst aside from himself at Forex Flow or at Forex Live years ago. When I say years ago, it's probably seven or 8 years ago. And when Forex Live sold to Finance Magnates, maybe 3 or 4 years ago, Ryan started his own thing, which is Forex Flow Live. And so I've known him for the last 7 years. He's super knowledgeable. And that's why I say it's, there's a few people you trust in this business from a, and I'm not saying like, trust they're going to lie to you. It's trust as far as knowing their crap, right? There's a few people that really, in my opinion, know what they're talking about in the markets, and they can really break things down in a logical manner and from a macro perspective. And he happens to be one of them. And that's why I'm really excited to work a little closer with Ryan in the future. So anyway, hope you guys enjoyed his analysis. We'll bring him on a little bit more. He's a great guy. All right, let's talk markets here though. So the euro dollar, as we've been discussing, is forming this bearish. This is a bearish wedge pattern. Let me get rid of this one right here. Let's just keep that, right? You can see it here. I believe I can fly. You guys don't even want me to start singing right now on a Friday. I'm so tired. I woke up this morning and I'm like, man, I could have used another 4 or 5 hours of sleep. I know I mentioned this to you guys yesterday, but it's when you go on vacation and then you need to like sleep in because you're like super tired. That was a good vacation. We slept I slept a lot. Anyway, I mean, I didn't sleep a lot. I worked. My legs are still sore from the last week, which is good, right? It's good. Okay, so really quick, we have this. I think a bearish wedge pattern is sufficient to say. So that means this resistance right here is going to be pretty important, which is 118.50. That means the euro has to get above 118.50 to really suggest that we're in a range. We're still bearish. Now, obviously, we're at very key support. Everybody knows that, right? This is key for so many reasons. But this is the big triangle support here. Break below that and things are going to get downright nasty. So that is 117.75. One of the other things is that's really interesting is, you hear, all these other central bankers are talking about, they're either tapering, talking about the importance of tapering, blah, 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 blah. And, here you got, Fed Chairman Powell, it's transitory. There's a lot of chatter that he is, starting to lose his, credibility. And, if the Fed falls behind the curve, that's something that, we need to be paying attention to, because that means they could act a lot quicker. That's why these inflation expectations are going to be really important today. All right, here's the cable. So, that's going to be key support. I had an order to sell the sterling overnight at 138.75. Didn't get triggered, obviously. We only made it to 138.50. That sucks. But same as yesterday, right? 138, or we can write down 137.90 and 139. This is still bearish. The risk here is, bigger double top forms. This is one of those. I'm going to watch this really carefully because I'm telling you guys, I want to be long euro dollars and I want to be long sterling at some point. But I'm just giving you a real quick down and dirty longer term view. Double top starts to play out. It stops short of being a full double top because we test this big broken multi-year decade-long trend line. Get long around 132, 131, 132, and I'm going to get long the sterling for a move back up towards 150. I'm giving you a long-term overall plan, just so you guys know. All right, this is just I'm telling you that's how I'm going to play it. If I get an opportunity to buy the cable at 131, 132, it's gonna be kick ass, I'll tell you. God, I'm talking like this fall or something. Anyway, okay, that's where we're at. Aussie's trading really heavy. I had an order to sell the Aussie last night at I already canceled it, but it was at 140, or 74, 40, 2 pips over the highs. 46, I think. Yeah, 46, and it was like 3 or 4 pips above the highs. It really sucks because that was the underside of that trend line. Because I traded the Aussie short yesterday. I was just gonna reshort it again today or overnight. It didn't quite reach my my order, so this is going to be 74.50. It's bearish because it's can't come out of a triangle. Breaks below 74 cents, and we should drop pretty quickly. On all this good news all week, if you think about you just think about like the employment data that came out of Australia this week. You got the RBNZ, hawkish tapering. Higher inflation data out of New Zealand. You think it might translate a little bit over to Australia? Blah blah. No, Aussie's been trading super heavy, and we break through 74 cents, and this thing is going to drop probably pretty aggressively. So there's nothing bullish about this chart. It's just lower highs, lower lows. Now it's consistent lows. We really have to break above 75 cents for this thing to turn bullish. This is just a bearish chart as it is. Kiwi. The Kiwi did spike higher yesterday on the higher inflation data. Now, do I still think the Kiwi is bearish? Yeah. I think it's a better short. I think it's a better short, here than long. I just, if we continue to see this, strength in equities, then, we might actually pop above some of this resistance. So I'm gonna write down 70.45. And I'm going to keep it in range because the Kiwi is definitely acting a little bit better. 69.20 is key support. The thing is we've been talking a lot about that with the Kiwi recently. The Kiwi has just acted a lot better than the Aussie in recent weeks. You guys have known that. Dollar Canadian. So the dollar Canadian, we almost reached for that 161% extension. If you look at yesterday's analysis in the dollar Canadian, like the 4-hour chart, we were looking for this 26.38. We made it as high yesterday as 26.15. I still think that this level can be hit, but what's more important about that is this is all horizontal resistance at 26.50. So we break that, dude, the dollar Canadian is going to squeeze like it's nobody's business. And the thing you have to keep in mind, this is the dollar Canadian squeezing with crude oil above 70. What happens if crude oil actually breaks back below $68? What if, I know some of you are like, nah, it's not going to happen. Well, I mean, what if we, how about if we take this out in crude? We break back below that breakout point. Oh my God, the dollar Canadian is it's gonna fly. If you were not in the chat room yesterday, shoot, I already deleted it. Yesterday, I got a message. Sorry, guys, I didn't mean to yawn on you. I got a message from one of the guys that I used to trade with over at Gelos, and he's like, him and I are both really bearish Norway, and there was a note on the from another analyst, and I forget who it was, Anthony Barton, or I forget. Anyway, talking about how the divergence between Norway and crude. It's the biggest. Shoot, let me pull it up before I just mince this all up. Most negative 50-day correlation to Brent oil in years. The Norwegian krona, and what that basically means is Brent's been going higher. Norway, Brent has been going higher, and Norway has not been following. Biggest divergence of that very strong correlation that we've seen. That just further enhanced the bullishness of the US dollar Norwegian krona, which, I'm aggressively long right now. And so imagine if crude oil actually drops or Brent drops. I mean, we will be trading above 9 shortly. Very bullish move out of the wedge, very bullish base that we built. As long as we stay above like 870, I'm just going to write 870. Ooh, shoot. I jumped ahead. Sorry. Let's go back to the dollar CAD. My bad. Let me just go ahead and write those numbers down. Anyway, I think the dollar Canadian dips are going to be bought. So if you can get a dip back to, like somewhere down here. So a brief new low, 125.40. It's not great support, but I think if you get a dip down there, that's a good place to even start nibbling long if you're not long. Swissy. Oh, 92. 91. We knew that. We wrote that yesterday. I'm pretty sure. $92. 91. 92. Now let's talk really quick. Let's say the Swissy does break out. Let's say it breaks 92. Where do we go next? I would say 92.40. Just in case. Just in case. Remember, we got inflation data coming out, so with inflation data coming out, I think the risk is that we start spiking, okay, in the dollar if that inflation expectations are hot. Dollar Norway, we already know it. That's support is 870. Yeah, big support zone down there. We could actually write, yeah, it's 870. Next resistance above 885 is going to be 904. So, and it'll be 9. So I'll just write 885. 9. Okay. Dollar MEX, same stuff, different day. Support's going to be right here, 1980. Resistance 2009, 20. I would just write down 2010, just make it easy. 1980. Range. Dollar yen. $110.55 support at 109.80. Now, I think we're tightening. Keep that in range. Dollar index. 92. We're just going to write 92.90. Super important. I think we need to be bullish unless we break back below 92. Gold and silver dipped this morning. And when I first, jumped into the chat room, gold was actually falling pretty aggressively. Mark and Craig both bought gold in the chat room. Good job, guys. I think they bought it like 6-7 points, $6-7 lower. Great job. So they picked I know they were buying it down here on this probably breakout point here. So good job, guys. As you guys know, I'm not convinced with gold. I'm not really excited about gold or silver at this point. So, but I see the reason why you would be a buyer there. Previous resistance acted as support pretty well. But the inflation data could move this market pretty good. So 1835, 1800. Range. Matter of fact, let me check something. Here's the daily chart. So we're back at the 200-day moving average. That's what I was curious about, because remember when we broke through the 200-day moving average, the bottom fell out of gold. Now we're just back hovering right at the 200-day moving average. That's annoying. Silver. $26.70. $25.50. S&P. As I mentioned during the FACE webinar today, big support's going to be at 4250, but for today, 4300, 4400. No reason to be bearish yet. Risk is on. like Donkey Kong. All right. Steve.
I assume you don't want me to talk with my mouth full, right?
Oh, no.
No, I'm
No,
kidding.
you didn't. Are you kidding again? My
that
God.
that's why it took me 2 extra seconds, though.
You know, Steve, I don't know if you've ever done this. I'm so tired right now, and it's kind of like my vacation hangover, I guess, because like
Oh, I know the feeling.
one of the I'm giving you guys probably a lot of way too much information. Our friends moved into their new house. They just bought a brand new home. It was beautiful. It's such a really nice home in Bend, Oregon. But they moved up their closing date. The closing date was supposed to be in August. They moved it up to like literally 3 days before we got into town. So not only did they host us for a week at their house, they actually, just moved into their new home. So they were like, had movers and blah, 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 blah. So they, they, they couldn't find like some of their, they couldn't find some of their things. And long story short, because
No toilet paper.
no, they did have toilet paper, but it was like, I want to say it was really an uncomfortable bed, but it didn't matter because I was so tired every day after hiking 8 or 10 miles, up mountains, kayaking for hours on end, being in the lake, paddle boarding, being on the river, blah, blah, blah. Every night, it didn't matter how uncomfortable the bed was. I slept like a baby.
You do understand that that's why that was the daily plan, right?
Yeah, right.
So you
Exactly.
don't have to to
Exactly.
complain about the bed.
Yeah. But they, in their defense, they hosted us, and it couldn't have been. I mean, I was just appreciative to have a bed, but they couldn't have been better hosts. And I don't know how they performed it. The reason why I'm telling you all this is because I was so tired after this trip, because I don't adjust well. My sleep schedule doesn't adjust too well. So because I'm so accustomed to getting up at 3 o'clock in the morning, or 3 to 4 o'clock in the morning, let's call it, my body doesn't adjust well on vacation. It took me like to the end of vacation before I was actually sleeping a decent hour. But now I'm just I'm at the end, now that I'm home, it's like I just want to sleep a little bit. So
Makes
my eyes
sense.
just are watering, they're pouring. So anyway, enough complaining from me. So what's going on, Steve? I know you had some things to say about some of these inflationary pressures probably when Ryan was on, but I know we wanted to give him some time to speak because he was our guest on the webinar. What are your thoughts about stagflation? What he had to say earlier?
No. I didn't have to say anything that I haven't said before. I mean, don't forget I had so many days with you being absent, to talk about all that. So I think we've gone through everything. There isn't nothing new that has come up since. My position about it. People that are listening in know my position about it. And unfortunately, because I don't consider it a fortune, what we've been saying with Stelios is, not even slowly coming true. It's an inevitable, uh, meeting with reality.
Yeah. Okay. Well, I'm sorry, Steve. I was just was trying to address another comment that just came in for us. I'm gonna pass it over to you so you can take a look at the markets. I don't think we do have inflation expectations coming in about 15 minutes, but there's something that I got to attend to. So I'm gonna leave it to you here. To cover anything that you want to cover, and I just want to say thanks to everybody for sticking around, for being part of the community. Remember, next Tuesday we're going to have some pretty We're gonna announce what we had been planning to announce for the last couple of weeks. So make sure that you guys are around for that. And Steve, I'm gonna pass it over to you, bud.
Thank you, mate.
All right, thanks, guys.
Talk to you later. Bye.
Talk to you soon. Bye.
Hey, guys and girls. Missed me? Okay, so not many things we have to talk about having to do with synopsis. Of course, Blake has covered already the majors, but you know the basic story here is that we still haven't seen a technical breakout in the dollar, right? I mean, I'm still tracking this DXY ascending wedge formation, which can break either way. In my opinion, stocks might play a critical role in deciding in which direction the DXY breaks through, right? We break through the upper side. I think we're going to see an attack of the 94, 46, 38.2 to 95 horizontal support resistance area. So, anywhere between 94.50 to 95, I think is a very good upside target in that case. We break to the downside, that's going to be a very bearish development, especially considering that in this rebound, we won't have even managed to produce a higher high, right? In which case, I think there is a very, very good likelihood that we're headed to new lows. So for me, that's going to be like a major technical trigger, which, I've been monitoring for so many days and nothing has happened yet. So, as the guest, great guest, by the way, the guy Dale had before, as his guest said, and we've said multiple times in the past, that patience is key to trading. I have to remain patient because, I don't want to flip a coin and trade long or short the dollar because based on what I see, I still see the potential of bottoming formations in several pairs like the Aussie, like the Kiwi, even like the Euro, which we haven't drawn this on the daily chart. We've done it on the 4 hour, but we might as well do it here as well. Here it is. So a lot of potential wedges, right, that can lead to reversals. Here's the cable as well, same deal, right? So the market is coiling, having to do with the dollar and the major currency pairs. And I don't want to flip a coin to decide in which direction I want to be trading it, right? I want to let the market show me, and then I'll be more than happy to enter some positions, even if the risk reward is not like the absolute best or fantastic you can have. In this case, conviction is going to be much higher. So I'd rather trade a little bit of a better entry point with much higher conviction than the opposite. At least that's my personal preference. Each person has their own styles, and I totally respect that as long as you know what you're doing and you have a trading plan and a proper risk reward to trade with. Now, gold was decently lower earlier on the day. It has already pared some of its losses. The reason I wanted to show the gold chart once again is because the higher we move, the more the likelihood that we might have seen the low, although I still favor the possibility of one more low in gold, right? But soon enough, if we see more appreciation, that's going to stop being the case. And the reason I'm monitoring this is because gold seems to be stalling at this confluence of resistances, at 1835 roughly, right? This ascending wedge trend line resistance, the 50 daily moving average, the 50% fib from that high to this low. So I really want to know what's happening here with gold. You know that my fundamental bias is for a much higher gold, and I do believe it's coming. But since I know, and we warned you in advance that the market temporarily might still keep perceiving higher inflation data as negative for gold and positive for the dollar, with the idea behind it being the completely erroneous idea, in my opinion, that the Fed is going to jump in ahead of the curve, and hence hike rates, and by hiking rates and increasing real yields, that should take the dollar higher and should take metals lower, monetary metals lower. I think that's the completely wrong assumption, but I was, I was expecting, and I was assuming the market's going to do that. The thing is that we're in a very tight rope that runs even tighter, meaning for every inflation print that we get, just to give you an idea, the current, extrapolating the first 6 months of the year, not even assuming that inflation is going to keep picking up in pace, which it has so far. I mean, the June data that we got was by far the highest we've had in since 2008. It was the highest print, and it was the highest we've got, of course, this year. So we can't even make the assumption that the inflation expectations will remain as they've been in the first 6 months. But even if we assume that, we're headed for a 7.4% inflation year on year. 7.4%, right? So for every single print that we get and inflation not really pulling back, the faith of the market that the Fed is going to jump ahead of the train and stop it in time is going to erode. And I think that's what's going to lead to a major dollar decline and a major leg higher in precious metals, right? But in any case, as I said, I still believe it's likely to see another low in gold before the uptrend, both in gold and silver, resume. For the same reason, I don't consider it unlikely to see another leg higher in the dollar before the downtrend resumes. And that's why I don't want to be taking any positions at the moment, because I'm pretty confident and sure of what's going to be happening medium to long term. But I don't want to enter. I don't want to have bad entry points just because I'm confident that something is going to be happening later on, right? Now, so basically, that was a summation of what I think, which you've heard it before. I just wanted to pinpoint to specific pairs and specific levels once again, having to do with equity markets. In all honesty, I mean, this is just a joke. Day in, day out, almost, I mean, let's say week in, week out, we have this slow grind higher. And yes, we have a lot of divergences that are jaw-dropping, some of them, right? But that on its own is not a reason to go short. So yes, I still believe that within the summer we're going to see, I don't know what's going to be the catalyst, but we're going to see a very sharp move lower, probably corrective in nature, right? But sharp. But I don't want to be waking up every day and trying to short the S&P or the Nasdaq or whatever else, hoping that that's going to be the day or tomorrow is going to be that day, right? So far, no technical damage done to any of the bull markets that we're looking at in equities. So you have to remain patient there. Now, last but not least, and then I'm going to go through questions. Let me also bring the 4-hour charts here. Crude oil. We had talked about this. We talked about this with Greg as well, about the corrective possible implications. A few days ago, I thought that this might even unfold as a triangle. Looking at the price action now and the little bear flag that's forming here, I now favor more the possibility of an ABC correction as a minimum, right? Because sometimes corrective moves start slowly and orderly, and they accelerate lower and they become something more complex that has a lot more strength. So keep that in mind. In any case, this simple, extremely simplistic, and sometimes simple is what happens, right? And that's why I favor first starting your analysis by making the simple assumptions before you start making complicated assumptions, right? So whoops, my mistake. So first simple interpretation being this, right? Quality target at 69.40, 3-wave move lower, in this corrective move in crude. But as I said before, might open up more downside. Now, if we only contain ourselves in a simple ABC here, as you understand, that means that we're closer to the bottom than we were at the high. And that's going to be a very bullish development. I mean, if what we develop here ends up being just something like this, there we go. That's going to have very bullish implications. Right. New highs following that. In a market that it's in any case very bullish, and we've said it before, even seeing this short-term high, both Stelios and I, that we're expecting this market to move much higher than where it is. But, nothing moves in a straight line, right? Nothing moves in a straight line. And that's why you shouldn't be chasing things that are extremely overdone. Now, this is a good segue to Amira's first question, which has to do with natural gas, since they're, relevant markets, let's say. Not that highly correlated, but definitely relevant. And as you see, the case with natural gas is that we've spent now 2, 4, 6, 8, 10, some 11, like 10, 12 days correcting. But look at this correction, right? Doesn't look that bearish, does it? So bottom line, if you remember, I thought that natural gas is very bullish, that it might retrace back to 339. And it might, but in all honesty, seeing this price action and the way it unfolds, I think there is a very decent chance we're not going to even make it back to 339 before we push higher. So far, price action seems corrective in time rather in price, right? And if nothing happens soon, I think we're breaking out and pushing towards 410. Soon. That's what I think about natural gas. Hi, Steve. I hope you're doing well today. Yes, I am. Thank you very much. Do you have any thoughts on the EuroCAD? Absolutely. Haven't had a look at the EuroCAD for a few days. Yeah, I mean, these crosses that people mostly don't pay attention to. It's not that I'm not looking at them, but I might have a look at them like once or twice per week. But as you see on the drawing here, it's not that old, right? I mean, last time we had a look at it, judging from this trend line, we were probably somewhere there, right? So at some point last week. So in EuroCAD, and I always like to do some top-down analysis. I first want to remind you of the bigger picture in case you haven't been here, one of the previous times we had a look at it. One of the important elements here is that there is this important ascending trend line support. And we also have not such a long term, but another trend line resistance over there. So this whole price action that we're seeing unfold here might be part of a bigger triangle, right? In any case, support has been very close. We tested again and again and again and again this support area, and we didn't manage to break through it, right? And that's important. This type of price action was, giving me the idea that there is a very high likelihood that we're going to break lower, which would be a very bearish event, right? Not just because we would break through this corrective channel, but we would break through this. By the way, how long back does this date? This trend line dates. Okay, Michigan's. We got data. Give me a second. 80.8 sentiment preliminary report. 80.8 versus 86.5. So much weaker than expected. Expectations also much lower. Conditions lower. So a rather decent miss in all three. Now we still don't have the inflation data. I don't know why they haven't been released yet. I'm assuming They're cooking them. No, I'm kidding. No, I wouldn't find it unlikely, but in any case, I'm kidding. That's my assumption. Let's give it. Okay, we got it. Actually, I don't know why it's not here. 1 year inflation expectations 4.8% from 4.3. Okay, so there it is. Here it is. 4.8. So yeah, and trust me when I tell you, I think this is going to prove to be very, very conservative. Yeah. And the 5 year inflation, 2.9 expectations. But in all honesty, I'm telling you this as an economist, right? Whenever you hear assumptions about a time horizon that's more than a year later, just completely disregard it and ignore it. I mean, I understand the mathematical purpose for which they're trying to make assumptions like that, but it's a joke, in all honesty. It's a joke to think that you can assume what's going to be happening in 2 years from now, nevertheless, 5 years from now, right? In 5 years from now, so many expected or unexpected events might have transpired that any type of expectation for any type of metric that's going to happen to come true is going to be purely coincidental and nothing else. So yeah, completely ignore anything you see for assumptions for like 2, 3, 5, 10 years later or whatever the rest. I mean, it's a joke. They just do it for practice and because like some of their models, need to have some inputs that are longer term. So in essence, they're forced to make stupid assumptions about so much down in the future that it doesn't really matter. So in any case, back to EuroCAD. So EuroCAD failing to break through there is can definitely prove to be a bullish development. But on the other hand, I still can't ignore the fact that we are consolidating in a rather tight channel here, right? We're testing resistance once again, but I mean, you see, there is no real trend, right? And there hasn't been any real trend since the beginning of May. So bottom line, we break through 146. That's going to be very bearish, and I think we're headed lower. We break through 149. I think that's going to be at least short-term bullish, and we should see a move towards 152. But as long as we trade anywhere in between, I think you shouldn't be doing anything with it. Just keep monitoring it until we get some kind of a signal. Okay. Hi, Steve. Can you please look at FSUGY? Yeah, absolutely. I have no idea what it is, but I'll be more than happy to look at it since charts are charts. And this is a bullish looking chart. Bullish in the medium term, bullish in the short term, bullish in the long term. No matter how you slice it, it's looking bullish, right? Very impulsive, moves higher. So speaking about the medium term, already higher than the previous highs, speaking about the longer term, and speaking like a little bit shorter term, definitely some kind of corrective price action played a role here. I mean, look at me, I'm going to end up being an Eliotician. But like one simplistic assumption could be here. Where the hell are you? Gregor's going to go after me, I'm pretty sure. Sorry. There. And that might have been the end of a correction. And why do I favor this having been the end of a correction? Because of this. Right? So, yeah, I think higher. Above 33, keep looking higher. I think we're likely on our way to new highs. My pleasure, Malia. Anything else, guys, gals? Anything else you want me to look at? APPH. Yeah, we had a look at it as it seems once in the past. Having marked that one, I can assume this clearly. You know, and I have to tell you, this really doesn't look good, right? This is the usual chart of a sentiment-driven market going parabolic and then completely imploding. Now, there is a case to be made that this move higher, you know, was somewhat, you know, impulsive, somewhat, and the move lower is somewhat corrective. So I can understand why you might be looking to take a bet here and try to catch this falling knife, right? I mean, I do see where you're coming from, as they say. So if you really want to be doing this, at the very least, you should wait for a break through this descending wedge, right? In which case, you should be still keeping your expectations rather low, which would be at least a retest of the 1996. So basically a retest of the 20 previous high over there. But in my opinion, trading this and seeing the bigger picture, I think you should be very, very cautious and be very strict, you know, with your risk reward and, you know, your stop losses, so on and so forth. That's what I think. TAN. Okay, so this is unfolding still some type of a move lower, which has a very decent chance of being corrected for the time being, right? So let it unfold. Now, this is an interesting support resistance area that we're currently testing, right? Now, we break through this, and I would stay sidelined and wait to see how this is unfolding, because there is always the chance that this is part of a larger corrective move and the corrective move is not over, right? So look at this. So this might be part of this. So we might still be in a larger corrective move. The alternative, as we said before, is that this was the corrective move and we've already broken above. So, you know, you see some impulsive moving lower. I think you should reconsider and just wait. That's what I think. ARC. Oh, yeah, ARC. Yeah, that's what we drew in ARC some time ago, from what I say. And it seems to be unfolding so far, so good. We seem to be breaking through this. So yeah, I would not be turning bullish here. And in general, I have to tell you that in my opinion, ARC is like the junkest of junk bonds in 2008. Now, I'm not saying that ARC can't move higher and produce a higher high. What I'm telling you is that it's going to be one of the first things that's going to completely implode once the wheels go off the bus. And they will eventually go off the bus, right? There's no question about it. So, yeah, ARC short term at least looks bearish, right? Looks like BTC. Which of all the previous ones, Jane, were you referring to, having to do with the Bitcoin comment? Which one did looked like Bitcoin? IWO. IWO. Yeah, nothing yet here, right? Still within a bigger corrective pattern. You know, give it some time. I think it's probably going to be breaking higher. But, you know, we might attack this trend line support once again before we do. NASDAQ. Nasdaq's still within this ascending wedge, right? I mean, we speculated some time ago when we were breaking through this green formation that this might bring us to the 161.8 at roughly 15,000, and then we might correct lower. So far, both have happened, both of the three assumptions, meaning we broke through this ascending triangle. We did make it to the 161.8% extension, and we have been somewhat pulling back. But from somewhat pulling back to breaking through this blue ascending wedge and actually producing a proper corrective move lower, there's some distance. So far so good, but this might prove to be another short-term consolidation before we propel ourselves even higher. Right, the recent RSI reading also on the daily chart, if you notice, which is, in overbought territory, is also, not bearish, right? So yeah, buying up here makes no sense, both fundamentally and technical. But on the other hand, trying to jump to the gun and being short, yeah, of course, somebody could say like, okay, I mean, I can be short exactly here, put my stop loss above the all-time high, which we found like 2 days ago, and I have a very, very limited risk, and that's true. I mean, I have nothing against that. But if every time we're like 1-2% of the all-time highs, you take the same type of trade and you do it again and again and again and again, you'll end up in this type of market environment. Yes, none of these losses are going to make you bankrupt, but the combination of like hundreds of losses, albeit small, each one of them is going to be like the equivalent of death by 1,000 cuts, right? Yeah, you end up burning cash slowly but surely, right? Now, as long as the market environment is what it is, although I don't have anything against this type of logic, as I told you, in isolation, right? I have something against it if this is like a generalized approach to these markets. Like, oh, every time we have like a little bit of a bad day from the all-time highs, I want to be short. That's a good hedge then, mate. Steve, I'm using this as a hedge short, and you're referring to ARK. I think it's a good hedge because, as I said before, I think this is going to be the first. It's going to be the first one that's. If you, are we talking about ARK, by the way? Sorry, I might have. Yeah, if you're talking about ARK, I think this is going to be the first one that's going to implode. So I think it's a very, very good hedge for this type of market environment. Very good hedge. Nvidia, quite a nice pullback after a parabolic move high, right? Unquestionably. Listen, this has been such a bullish market, and for good reasons. I've explained before in a webinar not far ago. I had explained all the fundamental reasons why Nvidia remains extremely strong, and I had even talked about like problems that cause supply shortages, so on and so forth. I can tell you that, and you need to put this in context, right? Look at this. There is a big possibility that this is a corrective move lower, but even within the context of a corrective move, you can see that this leg is impulsive, by the way, right? The whole correction, whichever way it might unfold, is going to end up being a corrective move, but this leg at least lower is impulsive. So bottom line, two things I see here. One, this correction doesn't look like it's going to be over like tomorrow, right? So I think it has more to run. That's point number one. Point number two, after such a parabolic move higher, keep in mind that this stock can retrace a very decent amount and still be technically very, very bullish, right? So it might look like a big distance. We've already retraced from like 835 to 74 to 740, which seems like a big distance. But trust me, we can go all the way back to 640 and still,
Hey, Steve.
yeah, mate.
Hey, I'm sorry. We have a call, buddy.
Okay, bro. Okay.
Talk to you later. Thanks, guys.
Yeah, I'm gonna wrap it up with this, and still being a corrective move, right? So keep that in mind. So don't try to buy this yet. I think it's going to unfold like in a more complex manner, right? But at some point, I think we're going to find a low and move higher, and that's a very good area, by the way, since we were talking about lows. Okay. Okay, as you heard, we have a call. So I'm going to wrap it up here. And, as always, I'm going to be here tomorrow so we can go through as many questions as you want. Have a wonderful afternoon, morning, whatever, depends on where you are. And obviously a wonderful weekend because I said tomorrow, I just realized it's Friday. So yeah, see you on Monday. Bye.